Hi, folks. Welcome to the Weekend Investing Daily Bite of 2nd of December. The markets have given up the recent strength, it seems. The narrative has shifted entirely to the USD INR. Um, if we look at the USD INR picture, in fact, I did a tweet today. I'll just explain that. Do read the disclaimer in the video before proceeding forward. So if you see this tweet, this is the USD INR chart of the last 2 decades. And every time there is a sharp move in the USD INR, it moves on average 19.8%. So it stagnates, then moves up, then stagnates, moves up, consolidates, moves up, and so on and so forth. This move this time so far is about 8.8%. So if it has to do an average move, we are going to be near 100. That's the message from the past history. I hope it doesn't repeat so soon. But we've had moves of 35% in 2013. We've had moves of even 23% in 2012, 15% more recently in 2022. So certainly now we are very near 90, 89.9 or something like that. It is very possible that we will go well beyond 90 in this move. Of course, there is no guarantees of any kind, but that's what history tells us that once the currency is let go, and usually it is the RBI which is trying to protect the rupee, and now it seems that they have allowed it to slide to make Indian exports more competitive because we were becoming relatively more valued versus other competing currencies. So that is a problem that we now face. Of course, because of the USD INR, a whole host of other issues are also there. Our import bill, the trade deficit that we have, is now going to balloon even further with the rupee weakening. And while exporters will have some relief and some gains, the imports are going to get crushed. Do subscribe to our channel if you have liked our content in the past and if you follow our channel. Let's see where the market charts are headed. So markets came off after this 3 days of trying to stay near the previous high. We've almost given up half of the gain of this big candle here. And today's move was sort of uh, I would say, a very disappointing move where that position that had been attained after 4 days of effort has somewhat been given up. Half a percent down on Nifty. Nifty Junior, however, still sticking there, minus 0.1% today. Mid caps down 0.2%, mildly down. Small caps down 0.44%. So small caps are not looking too good, despite the larger cap of the market space moving up. Small caps have not moved up, even with the leading part of the market. Nifty Bank down big 0.68%. So usually this is what we have seen in the past also, that the market moves behind Nifty Bank. So Nifty Bank, wherever it moves, the market tries to move there. And I think the rumor today in the market was that there is no proposal to hike FDI in PSU banks from 20% to 49%, or what was the rumor. That has been denied. Now, it is really not known whether the earlier rumors was any significant rumor or this one is a fake news. That, of course, is not known, but banks were falling today, including private banks, not just public sector banks. Gold is also looking like a bit tired after this about 7 8 days of run, down 0.63% today, 12834. Silver also resting today, minus 1.32% at 1,74,000. And USD INR is the talk of the town, as I mentioned, 89.85, up 0.31% today. So exporters are rejoicing, and in general, everything becomes more expensive for all of us. Advanced decline trends very much in favor of declines from the start of the day and stayed there through the day. So, pretty much a weakening prospect of the market, at least in the very short term, is displayed here, 181 to 319 in advanced declines. Nifty heat map is largely red. HDFC Bank, ICICI Bank, Axis Bank, Kotak, SBI all losing ground. You had Reliance lose 1.26%, ITC lost 0.8%, Power Grid, BEL, L&T, Indigo. Some of the recent gainers also were losing today. Bharti Airtel, Maruti, Dr. Reddy's, Asian Paints, big winner today. NTPC, Hindustan Lever were some of the small gainers. In the Nifty next 50 heat map, however, some PSU banks were still gaining. Bank of Baroda, Canara Bank were doing well. Bajaj Holding and Bajaj Housing, these were smashed down today. Adani Ensol, Adani Green, CG Power, Masdok, Indian Hotels, IOC, Hindustan Zinc, these were all coming off. JSW Steel, Vedanta, Enrin, Motherson, Siemens, Bosch, Britannia, Naukri, BPCL, Canara Bank, these were some of the stocks going up today. In the mover of the day segment, Ease My Trip has gone up 20%. So some winter sale has been launched and Ease My Trip has been coming off. I think the stock has gone down like 70-80% from its highs. So this is a I would say a welcome move for the investors in this stock of almost 20% gain in a single session. Sectoral trends almost all down, with capital market stocks losing 1%, tourism also 1%, Nifty financial services, defense stocks, private banks losing between 0.8 to 0.9%, and the banking space overall also losing 0.7%. Only minor gains were in Nifty Pharma and Nifty MNC. So now let's see what has happened in the last 1 month. In the last 1 month, capital market stocks have gone up nearly 5%, and real estate stocks have gone down really 6%. Media is down 5%. PSU banks and Nifty IT also up about 5%, 4 and 5%. So last month has been a mixed bag. And if we see over the last 1 year, then capital market stocks, PSU banks have been leading at around 24 to 25% gains, and media stocks down at 27%. Real estate and IT also down 14 to 15%. These are the bigger sort of movers of the last 1 year. In the capital market space, you had Nuvama, Nippon Life, 361 WAM, HDFC Asset and BSC lose some ground, down 1.02% on the index. US markets in the previous session have lost some ground, minus 0.4% down to minus 1.2% between S&P, Dow Jones, Nasdaq, and Russell. And in terms of stocks, Broadcom lost 4%, RTX Corp nearly 4%, GE Aerospace, Lockheed Martin, Merck and Company losing between 2 and 4%. Broadcom has been running a lot recently, so a mild correction has come through on that stock. Some of these stocks are part of the weekend investing US stock strategy, and these are certainly not recommendations. In the tweet of the day segment, we have a tweet from Yatin Mota saying Yes Bank and Union Bank will now be part of the Nifty Banking Index. So far, Nifty Banking Index had these 12 constituents, and now Yes Bank and Union Bank will be added. ICICI, HDFC, and Kotak Bank will see some weight cut. So perhaps that is also a reason why some adjustment would have started happening on announcement, and Yes Bank and Union Bank essentially will see strong buy inflows, because as indices will be followed by ETFs and a lot of strategies. There will be a lot of buying that will come through in Yes Bank, if not already so. A lot of times these news that we see are already discounted to a large extent. So it's a big shot in the arm for Yes Bank. And Union Bank, there was some rumor that it might get merged with Canara Bank. So if that happens, we will again be down to 13 stocks, but let's see when and how that will happen. In our next video today, we will do a data study on which sectors have led Nifty when it was at all-time highs and different market situations, and maybe try to see which sectors will lead the next big rally. So watch out for our next video. If you want, you can join the Weekend Investing Community. There's a form in the description. Just drop your email there and you'll start getting premium market insights. If you like our content, do like and share this video, and certainly do subscribe to our channel. That's all for this daily bite. I'll see you in the next one. Bye.